On today's Hashi, I'm discussing the strongest buyer's market on record, the year-end foreclosure report for 2025, and mortgage applications for the past week. Today is Wednesday, January 21, 2026. I'm Byron Lazine, and the Hashi starts now. Okay, welcome to the hot sheet. I've got to get my background tight. I don't know what this is. This looks like I'm coming from a library in Davos. Here, there we go. Get your game tight, Byron. Come on. All right, we got a whole bunch to cover here. We've got I ended up watching at about shortly after 8:30 Eastern time this morning. President Trump went on the stage at the World Economic Forum, and I'm like, all I keep seeing is headline after headline after headline of how the president is going to get on the world stage in Davos and talk about the U.S. housing market. Well, I don't know. I got about 15, 20 minutes in, and there wasn't much there on housing. Maybe it came after. The BAM team's going to break it all down. We'll extract all of the housing commentary and any commentary. There's a bunch of interviews that happen after. There's a bunch of reactions that happen after throughout the day. We're going to extract all the housing headlines from that and review it tomorrow. Of course, there was, talking about core inflation over the last 3 months being at 1.6%, talking about, hey, inflation has been basically, we've won the war against inflation. Talking about growth for GDP through tariffs, very strong on tariffs. And before I get to a couple of these topics here that we have obviously lined up, he's not letting up on this tariffs. And over the last couple of days, in the plan here to acquire Greenland, he levied more tariffs on Europe. He was very strong against Europe on this. This is kind of this is a good consensus of what has happened over the last couple of days. Nick Timmerose from Wall Street Journal, I'm sure he's out there in Davos with the elites. Kind of summarizing what's going on right now. Supreme Court waiting on that for the ruling on, is it constitutionality, the constitutionality of use on tariffs. By the way, the Supreme Court likely is going to say that it is within the president's power. While waiting for that, though, these new 10% tariffs on certain European nations, they begin in 2 weeks and they rise to 25% in June until the U.S. has completed a successful purchase of Greenland. This is, he has latched on to this. This isn't like, hey, we should do 50-year mortgages, send out a tweet, and then, never do anything else about it. They're going for Greenland, okay? And that is strong, use of tariffs, obviously. European nations are against this. The markets are, reacting to this. You've had, a huge reaction here so far with the market in regards to these negotiations on Greenland and using the force. You can see red here all at the top of CNBC. The market continues to move down. The 10-year is at the highest point in well over 4 months, highest point in the last 5 days, now at 4.279. We saw what this does. Yesterday was the biggest example. The 30-year fixed mortgage closes out at 6.21. What's this big drop here? Well, this is the announcement that I I was called Byron's against the president's big moves of $200 billion mortgage-backed security. It's just not that big of a move. It's like when my daughter, my 5-year-old, is playing Uno against me and I can see her cards because she's she's holding them like this, like, I can't help but look. I mean, she's showing me her cards. That's not that big of a move. It's like obvious. Okay, you're showing me the cards. Well, it was obvious when, they said, oh, we're going to go buy 200 mortgage-backed securities, that, yeah, there might be a quarter point, drop. And there was, but that it would be a shot in time, and that one headline, one big tariff move, one big, move that DC makes that investors don't like, can erase it like that. And, I don't have to show you the last 19 days to prove the point. I can show you the last year. And there's been many times, again, rates have gotten progressively better as the spread between the 10-year and the 30-year improves. But there have been many moments where one headline, one move in the market erases a quarter point or even a half a point momentum. And we saw it again. I knew that was going to happen. I knew buying 25 or the announcement of 25 or 200 billion rather mortgage-backed securities is not going to save housing. No, not at all. This market's going to feel a lot like last year. And if you're waiting for DC or anybody on either side of the aisle in a midterm year to come save the day and create better conditions, you're leading your clients down the wrong path. You take advantage of the moments, have multiple conversations when they present themselves, jump on the opportunity. If you walk into a casino and you double up immediately, walk away. It's the idiots playing for hours for their points that lose in casinos. The people that walk in there and say, you know what, I'm going to just give myself a coin flip out, all the money I'm going to play. I'm not going to get needled around here all night. I'm going to put it up there and it's a coin flip. If I win, I walk away. If I lose, I walk away. Either way, I walk away. The people that sit there all night for the crappy gin and tonics and the points on the little card that get pummeled. They lose every single time. That's the casino's designed to keep you in there. Why do you think there's not windows? Okay. So you got to take advantage of these opportunities when they happen. And guess what? There's opportunities in the market. I see Steve commenting about one of the biggest opportunities right now. If you believe in that market in Southwest Florida, where it just feels like he calls it Cape Coral. Wall Street Journal called the worst market in America today. Okay, so Redfin is now reporting that their longtime CEO is gone. No, they're now reporting home sellers outnumber buyers by a record margin, upping buyers' bargaining power. So, buyers right now buyers waiting until April when all the buyers are shopping, they'll have less power than they do today. But throughout the year, they're going to have more power than they had in times past. And they're gaining power on the overall. Okay. So there were a record 47% more home sellers than buyers in December. Okay. So it's the strongest buyers market on record, according to Redfin, going back to 2013. Now, I don't know about you guys, but back in, certain parts of the country, 2013 was a different story than it is today. But 2009, certainly 10, 11, 12, buyers, their data doesn't go back that far, I don't think, on Redfin, but the headline is a little bit misleading here. It's certainly not the strongest buyers market ever on record, but, certainly in the last decade, this is that. Okay. So, you've got 47% more sellers than buyers actively in the market, according to these Redfin estimations. And that's a long way away from where we were just a couple of years ago. So it feels dramatic. The shift feels, it feels really quick. I've got 14 of my, about 14 of my agents on a plane right now coming from Connecticut down here to Naples, Florida. Well, they're leaving a feels like temperature of 5 and they're going to walk off the plane. It's going to be 75 today. That's going to feel very, dramatic. Your toes warm up instantly when you get down to the beautiful Sunshine State and you're coming from frigid cold, feels like 5 degree, temperature state. The shift in this market was very dramatic, very quickly. Sellers can't wrap their minds around it. Okay. If you're in one of these markets right now, and I was just having a conversation yesterday with the team over at Spyglass in Austin, Texas, where I'm going to be, speaking at their event, Realty Hack next week. It'll be my first keynote of the year. Come in, if you're in driving distance to Austin, come over and check it out. Looking forward to saying hello to you if you're able to make that, realtyhack.com. But they were telling me, what they're experiencing in Austin and how sellers are just not willing to give up right now on their price. They're holding firm. Okay. And a lot of it is just not a persistent conversation around how dramatic the shift is right now. And, just because you say it once, guys, to a consumer doesn't mean it sticks in. I don't know if you've seen this, but there's this Matt Damon and Ben Affleck clip going around the internet today, or this past week anyways. And I don't know if you've caught it. Ben Affleck, Matt Damon, they've produced, directed a whole bunch of movies. They know the game inside and out. They know old school Hollywood and they know new school Netflix. And right now, what Netflix is telling their directors and their producers, anybody who's making a movie, they're saying, get the plot out there in simple English multiple times. Repeat it. And they showed a clip of a movie where it's like, hey, you got the rip, I don't even know what they're talking about, but it's like, it's the simplest sentence in the world. And every actor and actress is repeating it over and over and over again, as if the viewers of the movie are in the first grade. Okay. It's like, you're watching a short clip and you're like, dude, we get it. But what Netflix understands is people don't get it. People have very short attention spans. People are not paying. It's a 90-minute movie. It's a 70-minute movie. And they know for 70% of a 70-minute movie that people are going to be scrolling on their phone. They're going to be distracted. They're not going to be retaining the information. And they don't want people to get done with a 70-minute Netflix movie and say, what did I watch? I didn't even understand it. And Netflix, like, hey, it's not our fault. It's not the director's fault. It's your fault. Can't pay attention. And that's on a 70-minute movie. If you think after a 30-minute, 60-minute meeting with your clients, boom, they understand the market, they don't. Reiterating the conversation, obviously text and email, basic professional standards. Yes. But going through information and simplifying it and going over it multiple times is the game today. The clients who go back and say, man, my agent, they made it crystal clear for me. They made the process easy. Well, I know that agent spoke in simple terms and wasn't afraid to repeat themselves and wasn't afraid to live in a pause to make sure they got it. This is the kind of stuff, obviously, we're talking about on Role Play Masterminds every single week inside of BAMX. But just because you say to somebody without showing them visually or stopping them and living in the pause so that it sinks in, that there's been a dramatic shift on the amount of competition that they have as a seller, just because you say it in passing, say it over the phone, just because you say the words in one sentence doesn't mean they retain, remember, believe any of it. You got to hear it multiple times. The biggest companies in the world get it. Netflix, we've got to get it too. Number of home buyers in the market right now is at a record low. So if I'm talking to a seller in one of these markets, it's like, dude, it's supply and demand. This is where you're at, and don't do them. They'll throw you out of your house. So don't do that. Don't wear a flat brim into somebody's house, and don't do them. Be taken seriously. Win the business. A number of home buyers record low, while the sellers, the gap is at a decade least high. All right. We don't have the advantage. Okay. Listen, if you go to one of those colleges that it's like, man, it's 90% guys and 10% women, and you're a guy trying to be picky, or vice versa, 90%, 10%. It's like, You've seen the clips where, the young girl is like, hey, what do you want in your husband? Oh, he's going to be 6'2", make $1 million bucks. You're like describing the top, 0.1, it's just a small group. You can't be picky. Okay. It might be 6'2", making a lot of money, but, might not live where you want to live or be. And that's very rare, obviously, to match everything up. You can't be picky as a seller when you got limited buyers. You got to be strategically smart. You got to have a good invitational price and a really strong marketing plan. Speaking of Austin, strongest buyers market, Southwest Florida, really South Florida, Texas, Sun Belt states. You know why these are strong buyer markets? These Sun Belt states, not because people stopped going to them. Look what's happening in California right now. People are still moving to Austin. Okay. Austin is very attractive. People still want to be there. People are still migrating from the Northeast to Florida. Okay. Everybody, trust me, I know Connecticut very well. People haven't woke up in the country and said, ooh, man, Connecticut became real attractive all of a sudden. I'm going to move there. Okay. People are still moving to the Sunbelt states, and that's where the builders are building. That's the thing. That's where the builders are building. That's where the inventory exists. That's where the buyers have leverage. That's where there's the most downward pressure on pricing. Everybody wants affordability, though. Everybody wants more buyers to have affordability. We want fairness until they realize that affordability means that their home value goes down. If you want affordability in your market, guys, you do understand, and I want affordability, okay? But you do understand, for those of us that own real estate, that own multiple real estate properties, you understand when affordability comes true in the markets that you own real estate, that your value takes a hit. You can't just have affordable housing and then mine keeps going through the roof. You're going to put supply as one of the main contributors into a market to help affordability dynamics, downward price pressure. And that's how it works. Once people realize, oh, it's in my backyard, or my value, my asset could take a hit, they don't virtue signal as much. Okay, we got a lot of crybabies online, not a lot of problem solvers. Digging into some of the 50 most populous metros in the country today, percent in which sellers outnumber buyers. Anaheim, it's 20+%. Atlanta, it's 80+%. So these are buyer markets. Austin, 128%. So, these are the buyer markets. The balanced markets exist in Baltimore, Boston, Charlotte. Charlotte's a buyer's market. Chicago's a balanced market. Cincinnati's a buyer's market right now. Cleveland's a balanced market. Columbus, Ohio, Dallas, Denver, Detroit, Fort Lauderdale, Fort Worth, Texas, Houston, Indy, Jacksonville, Kansas City, all considered buyer's markets. Vegas, LA, Miami, all considered buyer's markets. Very few seller markets in the 50 most populous metro areas. Milwaukee's considered a seller's market. Montgomery County, Pennsylvania, sellers. Nassau County, New York, sellers. New Brunswick, sellers. Areas they're not building. Newark, seller's market. Boy, Newark's come a long way, huh? But when you don't build, you strangle inventory. Sellers are in control. The assets continue to inflate. Providence, balanced. San Francisco and San Jose are balanced. So mostly buyers markets. Tampa, DC, West Palm, all buyers markets. Virginia Beach, all buyers markets today. So huge shift in these areas. It's a different skill set. It doesn't mean that agents that, haven't worked one of these markets lack the skills. You can learn the skills. We're working on them inside of BAMX, school.com/BAMX. Try it out for free for 7 days. The skills can be acquired, but it's a different skill set today. It's a different conversation today, and it's a different approach that sellers need to take. One thing that's not holding the market back is some big, burst on foreclosures. Foreclosure activity has increased. It did increase in 2025. And it's just kind of getting back to what a normal level would be, guys. Okay. Don't get scared off by headlines. We're still below on a foreclosure rate, 2019 levels. We're still below 17, 18, 19, which nobody was talking about foreclosure issues then. It was very normal. It was a natural part. That's one of the nice things about our economy. There is a, there's a net at the bottom that catches these things. It's healthy for the market for there to be a level of foreclosures. If you fail, you lose. There's a process for you to, figure it out and get back on your feet. Unless you take debt from the government on your college education, and there's no recovery from that. But if you go out there, try something, take a risk, you have a safety net. It's a healthy thing for our economy. And it's below normal natural levels. So foreclosures coming in 0.26%. Foreclosure rate. U.S. properties of foreclosure filings, 367,000. It was 500,000 in 2019. So even as this increases month over month, it should be increasing month over month. We're still probably going to fall short of 2019 levels. Okay. Lenders started the foreclosure process in 25 on 290,000 U.S. properties. By the way, I was looking at foreclosures last night. It's nice to look at them if you're an investor. Okay. If you want to get something, it's nice to be looking at them. I texted someone, I run a title search on this. Might be a little something here. So it's up 14% from 24, up 213% from 21, but down 14% from 2019 and down 86% in the peak in 2009. Guys, we got at least 14% more on another increase, which is what we had this year on foreclosures to get back to normal natural. Oh my God, foreclosures are up. Yeah, they should keep going up. I love it. Let's get back to normal levels. We want the we want the market to normalize. This is one of the, components of a normal, healthy real estate market. Lenders repossessed. I don't even know if I said it right the second time, so I won't say it the third time. They repoed. That's how we said it back in the day. 46,000 plus properties through foreclosures, REO deals. I mean, if you didn't work this business after the GFC, you might be like, "What's the REO?" We were all agents were dealing REOs. Is that an REO property? Dealing with the REO companies. Repossessed 46,000 plus properties in 25, up 27% from 24, down 68% from how many were actually taken through the foreclosure process back in 2019, which was 143,000. Okay. So opportunities there, nowhere near 2019 levels. Here's the average days to foreclosure right now, 592. Those are the lowest days since going back to. You got to go back to 2014. You got to go back to 2014 Q1 to have a lower average days to complete foreclosure. Why is that? The banks are not overrun with them. 592 is still a long time to complete a foreclosure, by the way. Probably pretty inefficient process. But the bank, if you start seeing an increase, this takes longer. Banks are more willing to work with people, obviously post 2012. So you've seen these days go up since 2012. And they're up to 592. It's the lowest. It's the slowest or the fastest since 2014. Okay. Mortgage applications. Mortgage Banker Association put out their report here today. So fresh data on mortgage applications. They've increased 14.1% from last week. So now 2 weeks in a row into January, double-digit week-over-week increases on mortgage application. More buyers than 2025 now for 2 weeks in a row who are seeking a mortgage. This is a leading indicator that, the spring could be more competitive than last year's spring. That's the headline number. The refinance increased 20% from the previous week. It was 183% higher on refis than the same week a year ago. Okay, so is refis driving it? The purchase index increased 5% from 1 week earlier. Okay, so purchase index not in double digits. Purchase index up 5% on the bump up from a week earlier. The unadjusted purchase index did go up 12% compared with the previous week, and it was 18% double-digit growth from a year ago. 2 weeks in a row, we've gotten that on purchases. Another good sign, if you see this on a consistent basis here in the first, call it 60 to 90 of 26, that we will see a more active spring market. Now, going back to what I led with, what a market's not like. Okay, why is gold hitting an all-time high? Gold's hitting an all-time high, and people are selling out of U.S. treasurers, biggest sell-off in 3 months, because of what's going on with this obsession on Greenland and the tariffs. Now, don't worry about tariffs long-term. It's just the impact that we're dealing with right now. Again, I don't worry about tariffs long-term because they've often been used in the last 12 months. As I said 12 months ago, they've often been used as a negotiating leverage point. And so I don't get too worked up about it in the moment. The market certainly is sending a signal that, hey, if this lasts, that, that's going to be bad for the U.S. economy. Right now, in the moment, we're going to switch investments. These things are algorithms, gold and, other things. The Secretary of Treasury says the U.S. is unconcerned by Treasury sell-off over this Greenland deal. Doesn't have much consideration for Denmark. Not laughing if you're listening in from Denmark, but it was kind of funny. So the Sell America trade, full swing yesterday after the holiday Monday. Investors cashing out of U.S. stocks and bonds. So they're saying to the administration, we don't like that. We liked where things were going. That's why the stock was at the all-time high. Now we're going to go gold. We're going to go other things. I don't know what Bitcoin's doing. Probably up today. Let's see what the Bitcoin. Oh, Bitcoin's down. Last 5 days, Bitcoin's down. Last month, up a tick. Been hanging out just under that 90,000. But gold, we know, is all-time high. Silver shooting through the roof. Stock market today is second day in a row where it is down. Let's just see if that's held firm through. Oh, no, sorry about that. And this is why I don't get worked up about the freaking tariffs. Okay, it was, big sell-off yesterday. It started down at the beginning of the show, and look at this. I don't know if it was the Davos speech because I haven't dug into it yet. But don't get worked up over the tariffs. Now, what I'm going to look at next is, okay, what's going on with the 10-year? Because yesterday we erased the momentum of the $200 billion mortgage-backed securities. And the 10-year, so they're still selling off on the 10-year treasuries. You're at a 4.285, so probably still going to lose out on the mortgage-backed security momentum here in the short term. This could impact the mortgage applications next week. All right, so we got these 2 big weeks of mortgage applications. This is why timing matters. You can't time the market, but the timing of you bringing information matters to people. First mover advantage in any year matters to people. I get it. In the northern states, it's going to be bitterly cold this weekend. We live in sweatpants culture, and people want to sit around in sweatpants all day long, and they'll kick the can down. Let's go home shopping when everybody else does it, when it's spring. Well, first mover advantage is going to win. The buyers are out there negotiating in these cold temperatures now with sellers who are like, what's going on? I hear crickets. I'm sitting at the neighbor's house watching the open house. There's no activity. Well, those are the buyers that are going to win more. They're going to have more leverage. And so bring the information to people. Remember what I said earlier. You got to speak in really simple terms so that they understand, and reiterate the message multiple times. Okay. Listen, if you're listening here live on YouTube, love for you to subscribe. Share this with somebody you care about in the industry who could benefit from it. If you listen on Apple, Spotify to the replay, thank you. Love for you to consider leaving a review. If you want to work on these skills, just join us in BAMX, school.com/BAMX. You can try out for free for the next 7 days. Opened up for you to try the free trial. Have a great day, guys. Good luck here on this Wednesday. All the conversions going to be in the conversations that you're having and bringing people that relevant information. They're getting served so much information. And being able to speak to what they're seeing and bring it down to a simplified level is the game today in 26. Live in those conversations. Good luck to you. I'll see you next time. Until then, toodaloo.